How much money you really need to buy a house in Northwest Louisiana. One of the biggest reasons people put off buying a house is because they think they need a huge amount of money saved up before they can ever start. A lot of people assume they need 20% down plus a bunch of extra money, and they end up talking themselves out of buying before they ever even speak to a lender. The truth is, in many cases, you may need a lot less money than you think. So in this video, I'm going to walk you through how much money you actually need to buy a house in Louisiana, what those costs look like, and what buyers are often surprised by once they start the process. Hey y'all, I'm Jen Gamble. I'm a realtor here in Northwest Louisiana, and I help people buy and sell homes in the Shreveport and Bossier City area. And one of the most common questions I get from buyers, especially first-time buyers and people relocating, is, how much money do I really need to buy a house? And that is such a good question because there are a few different pieces to this answer. It's not just the down payment. You also have closing costs, earnest money, inspections, and then of course your monthly payment once you own the home. So what I want to do in this video is break all of that down in a very simple way using real examples so you can understand what this actually looks like and what you may need to plan for. Section 1, the biggest myth. You need 20% down. Let's start with probably the biggest myth in real estate, and that is the idea that you have to put 20% down to buy a home. A lot of people believe that if they don't have 20% saved, they're not ready to buy. And that's just not true for many buyers. Now, yes, there are situations where someone may choose to put 20% down, especially if they want to lower their monthly payment or avoid private mortgage insurance on certain loan types. But for a lot of buyers, that is not the minimum required to buy a home. There are several loan options that allow for much lower down payments. For example, FHA loans often require about 3.5% down. Some conventional loan programs may allow as little as 3% to 5% down. And for eligible VA buyers, a VA loan may allow 0% down. So if you've been thinking you need 20% down, that may be the very thing that's keeping you from even exploring your options, when in reality, your required down payment could be much lower than that. That's why I always tell buyers not to disqualify themselves based on assumptions. Let a lender tell you what your real options are, because they may be much better than you think. Section 2, what a down payment actually looks like. Now let's make this more real with numbers, because I think that's what helps people understand it the best. Let's say you're buying a $250,000 house. If you were putting 20% down, that would be $50,000. And for a lot of people, that number that they just heard, that's why they feel like buying a home is just so out of reach. But if you were using an FHA loan with 3.5% down, that would be $87,50. And if you were using a 5% down conventional loan, that would be $12,500. And if you were eligible for a VA loan with 0% down, then your down payment could actually be zero. That is a massive difference. So right away, you can see why it's so important not to assume you need 20% down, because depending on the loan type, your upfront cash need could look completely different. And that's really where a conversation with a lender should start. Not with random internet searches or guesses, but with a lender who can actually look at your income, credit, debts, and your goals and tell you what loan options make sense for you. Section 3, down payment is not the only cost. This is where buyers sometimes get caught off guard. even if your down payment is lower than expected, that doesn't mean that's the only money you need. One of the biggest misunderstandings I see people thinking, okay, I've saved my down payment, so I'm good. But when you buy a home, there are usually other upfront costs involved too. And that's why it's important to look at the full picture. The main categories buyers should understand are down payment, closing costs, earnest money, inspections, and then sometimes moving expenses or immediate home-related purchases after closing. So even though the down payment is a big part of the conversation, it's definitely not the whole conversation. Section 4, what are closing costs? So let's talk about closing costs because this is a big one. Closing costs are separate from your down payment, and they include a number of fees and prepaid items that are part of the home purchase and loan process. This can include things like lender fees, title fees, appraisal fees, credit report fees, attorney and settlement fees, depending on the closing setup, prepaid homeowners insurance, prepaid property taxes, and setting up your escrow account. Now, the exact numbers vary depending on the lender, the loan, the house, the timing, the insurance cost, and a few other factors, but a very common rule of thumb is that closing costs are often around 2 to 4% of the purchase price. So, if you're buying a $250,000 house, your closing costs might be somewhere in the ballpark of about $5,000 to $10,000. Now, that doesn't mean every $250,000 house will land exactly in that range, but it does give you a realistic idea of what to plan for. This is why it's so important to talk to your lender early and to review your loan estimate carefully, because that document helps show you what your estimated cash to close may be, and you don't want to show up short. Section 5. An example breakdown on a $250,000 house. So let's take this $250,000 house example and let's walk through it a little more clearly. Let's say you're an FHA loan buyer with 3.5% down. Your down payment would be about $8,750. Now, let's say your closing costs end up being around $7,000. And again, that could be lower or higher, but let's just use that as an example. Now, you're looking at about $15,750 total between your down payment and your closing costs. Then you may also pay for things like your inspection, which can be up to $600. It could be less, but a lot of the good ones are going to charge you about $600, and it depends on the property and the inspector. So let's say maybe that adds another $600 on top. All of a sudden, you can see that the conversation isn't just, can I afford the house? It becomes, what do I need to have available to actually complete the purchase? And that's why I think this topic matters so much. I always get a lot of questions about it because buyers often focus only on price, when what they really need to know is total cash needed and the monthly payment. Section 6. What earnest money is. Another thing that comes up during the home buying process is earnest money. So earnest money is a deposit that you put down when you make an offer on a home to show that you're serious about the purchase. Now, this is not usually an extra fee on top of everything else. In most cases, that money does end up being credited toward your closing cost or your payment later. So think of it more like a part of your total cash needed, not necessarily money that disappears. The amount can vary depending on the market, the property, but many buyers may put down around 1% of the total purchase price, sometimes a little bit less, sometimes a little bit more. So on a $250,000 house, earnest money might be around $2,000 to $2,500 depending on the situation. And again, That usually gets applied to what you already owe later, but is still cash you may need to have available at the time you go under contract. Section 7, don't forget inspections and other upfront costs. One thing I really want buyers to understand is that there can be a few other out-of-pocket costs during the process that aren't always front and center when people first start thinking about buying a house. For example, inspections are a very important part of the process, and that cost is usually paid upfront by the buyer. Depending on the property, you may have a general home inspection, and in some cases, there may be additional inspections or evaluations if needed. The exact amount can vary, but this is another reason you want some money set aside beyond just your down payment. Then there are practical things that people don't always think about, such as moving costs, utility deposits, buying appliances if needed, changing the locks, small repairs, or basic items for the home after you move in. So even if you technically have enough to close, you also want some breathing room so you don't feel wiped out financially the second you get the keys. Section 8, monthly payment matters more than purchase price. This is one of the most important parts of the conversation. A lot of buyers are very focused on how much money they need up front, and that makes sense because that's a big hurdle. But what matters just as much is whether the monthly payment fits your real life lifestyle, because the price of the home is not the payment. The monthly payment may include principal, interest, property taxes, homeowner's insurance. You might have flood insurance, and you may have HOA fees. So two homes that are the exact same price can have very different monthly payments depending on the taxes, the insurance, whether or not you're in a flood zone, and the HOA situation. That's why I always encourage buyers to think in terms of both 1, cash needed up front, and 2, monthly payment comfort. Because even if you can technically buy a house, you still want to make sure you feel good about living with that payment month after month. Section 9, Louisiana-specific things all buyers should know. Since this video is specifically about buying in Louisiana, specifically Northwest Louisiana, there are a few things I think are especially important to mention. One is that property taxes here are often lower than what buyers from some other states are used to, which can be a nice surprise. Another is that insurance can be way more than people expect, and depending on the home and the location, that can have a very real effect on your monthly payment. And then, depending on where the home is located, flood insurance may or may not come into play. So that's another reason why a house that seems affordable on paper may end up costing more monthly than a buyer expected. So when you're looking at houses in Louisiana, especially if you're relocating from out of state, it's very important to look beyond just the listing price and really understand the full cost of ownership. Section 10, can the seller help with the closing costs? Now, here's some good news. In some situations, we may be able to negotiate for the seller to help pay some of the buyer's closing costs. Now, this does not happen in every deal, and it depends on the market, the property, the loan type, and how the offer is written, but it is definitely something that can sometimes help reduce how much cash a buyer needs to bring to the table. This is one of the reasons strategy matters so much when you're writing an offer, because it's not always just about price. Sometimes it's also about structure, terms, and figuring out how to make the numbers work best for the buyer. And that's where having a good lender and a good realtor working together can really make a big difference. Section 11, Why talking to a lender early matters. If there's one thing I want people to take away from this video, it's this: do not guess your way through the money side of buying a home. Don't assume you need 20% down. Don't assume you can't qualify. And don't assume the monthly payment is going to be too high. Also, don't assume that you know what your total cash to close will be without talking to your lender. A lender can help you understand several things: what loan programs you may qualify for, how much house you may be comfortable buying, what your estimated monthly payment could look like, and what your approximate cash needed to close may be once you have all of those numbers. So once you have all of those numbers, everything starts to feel more real and much less overwhelming. Section 12, the real takeaway. So how much money do you really need to buy a house in Louisiana? The honest answer is, it really just depends on your loan type, the price of your home, insurance costs, whether the seller contributes to closing costs, and a few other factors. But for many buyers, the amount is much less than they assumed. And that's why I think this conversation is so important, because sometimes the biggest thing holding someone back from buying is not reality, it's misinformation. So once you get real numbers, you may realize that buying a home is much more attainable than you actually thought. Here are a few common buyer questions. And I do hear these a lot of the time. Do I need 20% down? Usually no. Is earnest money extra? Usually no. It typically gets applied toward your closing costs later. Can the seller help with closing costs? Sometimes yes. Should I wait until I have a huge savings account? Not necessarily. It really depends on your full financial picture. That's why I always encourage people to start with a lender conversation, because the more you understand your options, the easier it is to make a smart plan. So there you have it. If you're thinking about buying a home in the Shreveport or Bossier City area, and you want help understanding what this might look like for your situation, I'd be happy to help point you in the right direction. I can help connect you with any of our local lenders, walk you through the process, and I can also help you understand what to expect so you can make a smart decision with real numbers. My contact information is in the description below, so feel free to reach out anytime. And I'll see you in the next video.